Alright, then okay, sir.
Right. Sorry. Right. Okay. Thank you. Sorry for disturbing. Right. And now you can see, no? Okay. So we will continue where we have left last time. The people who joined on today. So I just recap what we have discussed last 4 hours, right? In a very nutshell. This model is consist of 12 hours this week, last week, this week's and next week, right? There are 12 hours for our class. That's the model for strategy planning. And then it's a 4 hour what we have discussed last time, I mean the last Sunday. I'll just give an introduction to strategy planning, right? And how the strategy planning started in the world and how it developed. And again, once it come back, how it again develop and things like that, right? And then we discuss the what are the key components of strategy planning. So these are the area last week we have covered different design, what is vision and missions, goals and objectives, right? Okay, so last week in fact we discussed every bank manager has 3 fundamental questions to be faced because those are strategically important. So whatever your position, every employee or every manager need to sort out 3 fundamental questions. So what are these 2 questions are? Where our organization? Now, if you take your bank branch, what is your present bank branch position? If you're in the corporate level or the middle management level, you say, what is my bank present position? Right? And then we're going to look at it. Where do we want to go? So how I'll bring my bank for next 3 years? Where are we going to go? In terms of deposits or in terms of profits, in terms of market share. Now you see today your market share is 5%. So in 2024, you want to improve into 8%, like that, where you want to be, right? Then the third question comes, okay, you having identified your present position, and then where your organizations want to go, and then how to go there. That's the most critical question you need to answer. That is why we need to have a strategic plan. So if you put it in a nutshell, so okay, where we are now, where you want to be, how to be there, right? So these are the important 3 things, while also we are going to touch upon whether we want to find it out, whether we are going in the same directions or not. So for that, you need to evaluate. So that's the 4th part, but major part in the 3 questions. So for that, we discuss, our topic is strategy, and we discuss the definitions of Johnson, Scholes, and Whittington's in 2011. We discussed what do you mean by a strategy, and last week we discussed in detail. Strategy, it's give you a direction where your organizations want to go, and it's give you a scope which market you are going to compete, but usually you are look at it for longer term, right? And achieves advantage. What are the advantages you are going to achieve, right? And every strategy need what? Resources. Without resources, you cannot implement your strategy. So therefore, you need resources. You need to configure these resources in this changing environment, right? Finally, what you're expecting, you're going to fulfill the stakeholders' expectation. And this is the very broad definition for strategy. So that, of course, we discuss in detail. Now, last time also I told you there are some keywords: directions, long term, scope, advantage. These things you need to remember. So we discussed in greater length last time this. And then we went into discuss about what do you mean by a strategic management. And in fact, we discussed in the business world, we say strategic management is an academy word. So when you're learning in your university, right, your MBA or whatever, you call it a strategic management. But it's suppose if you are in a banker, you are working for a bank, but you won't say strategic management per se. So what you say? We say strategic planning, right? But both are same. But what is the meaning of strategic planning or management? It is a management process, right? It is a management process. Your management process is consist of art and science. So you must have a creativity, and you use the scientifically proven some theories, right, for formulating and to executing and evaluating the cross-functional decision that enable an organization to achieve its objective. Now, what do you mean by a cross-functional decision? As an organizer. Now, remember another important thing is this strategy is basically, Puta, we are preparing for the entire organization, right? So therefore, it should be a one plan, right? It's a one plan. So then we discuss, there are four aspects you need to look at when your preparations of strategic planning. One is interdisciplinary. Interdisciplinary mean we discuss so strategy planning for the entire bank. So therefore, you need to have a different divisions in your bank. Maybe operation, maybe marketing, HR, finance. We need to get the cross-functional. There is a discipline between these uh, lines. Then it is an external focus because you need to plan your strategy, look at it, what is happening in the external environment. Then also you need to look at it, what is happening in the internal environment, right? Whether we have enough resources, whether we have enough competencies. So that we are going to discuss a little later on, right? And also you need to look at it, the future aspect, right? From present, where you need to go. These are the four aspects of strategic management where we have discussed in a greater length last week, right? Okay, just to summarize what I have today. Then we discuss about this process. Now, what do you mean by a process? Process means series of activities. So strategic planning or strategic management also a process. Now, process means defining the series of activities, right? Okay, so therefore the four main component of a good strategy plan is you need to identify your present position. So that is what you call strategic analysis. We discussed in detail, right, last time. Then the formulation of strategy, right? What are the possible options? Now, say for example, if we want to go from Boralla to Maharagama, so there are different routes you can go to, right? You can go to Navala or maybe Battaramulla. From there, you can go. You can go through the Gold Road, go to Dehiwala Junction, and take the Dehiwala Road, Maharagama Road, and can go to Maharagama Road. Or otherwise, you can take the high level road. So there are different routes, right? So that is the strategy formulation. Strategy implementation, right? Strategy implementation. That is, once you've done the strategy, you need to implement these strategies, right? You need to implement, execute, and then we want to find it out whether the formulated strategy are working accordingly. So for that, we need to evaluate the strategy. So these are the four main components of a strategic planning process that also we discussed. So then we discussed in details last week what are the benefits. Now what we are discussing, Puta, what are the things what we have learned last week. So what are the benefits of strategy? Now I'll explain to you. And strategy plan is a mandatory plan. Now according to the central bank, every bank need to prepare a strategic plan, right? Like succession plan, like business continuity plan. Now the new plan you need to prepare is another plan is called recovery plan. There are four plans mandatory by the central bank, right? Okay, so why we need to prepare? Why, what, how it benefit to the bank, right? Because the strategic plan give your direction to the entire organization. And so all the employees must be aware about your organization's goals, right? And then, so whatever the limited resources you have in your bank, right, must be efficiently and effectively used to in order to achieve your goals. Then, so without strategic management, we need it's give you facilitating the evaluation whether are we going in the correct direction, so are we achieve the targets by using this strategy. And also it's facilitate for us to look at it the environmental, right, some factors, how it impact the factors. And finally, because strategic management or strategic planning I mean encourage us to proactively look at it, whether rather than waiting the last minute and do the action. And proactive stance mean, so beforehand we will facilitate to think, right? So these are some of the benefits we learn. Then we also, while understanding the advantages of strategic planning, we also discuss certain criticism. Everything we have a criticism, no? So what are the criticism or what are the disadvantages? What disadvantages is cost and time. So strategic planning is take time and also is costly. Now most of the organizations, suppose if you want to develop a strategy for 2022, now you can't prepare with too late. So for preparations of strategy plan from 2023, at least you need to start somewhere in September, August, right? Then only, it really works to implement from 2023, right? And also prescriptive nature. Usually, you know, you must have a certain prescription. Now, we discussed last time, a strategy plan is a prescription. Doctor's prescription for medicine, management prescription is strategy planning, right? It's give you what sort of action you need to take. Now say for example, doctor, they give you prescription, these are the antibiotics you need to take, these are the vitamins you take, the blah blah, like for you identify to sort out your problems, health issues. Likewise, the management prescriptive is a strategy plan. It tells your organization what to do, how to do, and things like that. And also, it is a formalization process, at least, but it should be flexible. But most of the time, what happens, there's a disadvantage of this. Formalize mean there's a lack of flexibility. Anything you formalize, there is a lack of flexibility. So that's the two things going along with that. Right. So then the lack of realism. Sometimes people think without this strategy planning also, we in the position to achieve the targets and blah blah. So these are some of the criticism of strategic planning. Right. And then we also wanted to discuss, now today, a lot of people are talking about corporate governance, right? Now, how the corporate governance, the relationship between corporate governance and organizational strategy, right? So we discuss in detail what is the relationship between corporate governance and strategy planning. Now, the strategy planning is a very important plan. It has to be developed by your senior management with the support of junior staff. Right. Now, whatever the plan you need to, it's tells you your growth. It's tell you where your organization is growing. So therefore, it has to be approved by board of directors. So that one of the duty, corporate governance of the board of directors, right? So you ensure that every risk was identified. Your strategy will be monitored and accepted by the board of directors, right? So therefore, good corporate governance, right, linked with strategy planning, because the board of directors are there to approve your strategic plan. Okay, I hope you understood. that part. Right. Now, let me continue from there. And then we discuss about what are the problems you face in strategy planning. Most of the time, you failure to identify the risk. Now, that is why we have a risk management uh, operations and risk officer in the organization. Because in your strategic plan, you take a lot of risk. So you need to identify the risk. So one of the problem is strategy planning, failure to identify the risk. Then strategic drift. That strategic drift means you are just going out from the plan. Most of the day you work out your own without considering your plan. Then of course strategy, as I told you, it need resources and it need finance, right? So good strategy, you need money. For that you don't have. Then a lot of people are not aware about what is strategy planning, and how to, what are the components, how to develop the strategy plan, and those are some skills you require. Then there are some regulatory issues, because as I explained to you, the strategy planning need to be carried out by bank is a mandatory. So central bank may look at it whether you are having the correct things, right? So then we discuss again. So I'm just discussing with you what we have discussed last week, people who joined today, or for you to get an idea. Right, now we discuss about the strategy, and there are three levels of strategies. So three levels of strategies developed by different people. Like now the corporate level strategy are usually prepared by the board of directors and the management, top management. Now say for example, how many branches to be opened, or you are going for a co-banking solution, or what new co-banking solution, or you are going to acquire another bank, all are corporate level decision. Then there is a business level decision, right, where you are using for your business level decision, right? How to be compete in the successful in that particular market. Say suppose you are a housing bank, so what is your business level? So how you are going to fight with the housing market? Then the operational or functional level, that's a third level of strategy, where you talk about your functional activity, how you conduct your HR, how you conduct your marketing, production, operation, right? So in the very the below level, I mean the functional level or operational level. So operational level strategy need to support the business level strategy, at the business level and the operational level strategies support the corporate level strategies, right? So these are the three type of strategies what we have discussed in details. Then we discuss, when you asked to prepare a strategy plan, usually there is a rational approach. There are different approaches, but we are going to discuss the referential approach. So first, what you need to do, you need to develop a vision and mission, right? And then set your objectives and develop strategies, implement and measure. So broadly, these three steps can be divided into formulation, implementation and evaluation, right? So that's what we discussed. Then we discussed the one of the major issues in strategy planning. We discussed where are we now, where do we want to be. Now take for an example, in your bank, your present market share is 10%, right? In 2022 you understood, in 2020 21 your market share is 10%, for example. Now in 2022, 23, 24, what you're going to be your market share you're expecting? Maybe 12%. But don't look at it 25, 27 is never going to happen. We will discuss, right? 20, 12%. So only 2% you're going to achieve next year. It's a very huge amount, right? So that is your second, answering the second question. Now for that, one of the key characteristics what we have identified, Puta, now is the clear picture. Now it gives you a clear picture where your organization is going to be. Now, what are the components for that? What we discussed last week: vision, mission, values, and goals and objectives, right? So that is where your organizations, these are the component of this, where your organization is going to be. So we discuss, right? And then we start the main component of strategy planning is vision. And we discuss where you can see the vision. Now every bank must have the vision. We use what are the different banks visions, different famous organizational vision, and it's give you a picture of the future your organization, right? Now, so then we discuss why vision is necessary for a bank, right? And then we also discuss what are the key important component of our organizational visions, right? It should be forecasted, inspiring, motivating, purpose driven, audacious, every easy to remember, something something you need to facilitate. Now ඒක හරියට අර ඔගොල්ලෝ දැකලා ඇති හින්දි ෆිල්ම් එකක් තියෙනවානේ කුෂ් කුෂ් හෝතා හේ කියලා තුම් පාසායි කියලා සින්දුව එක ඔබව දැක්කම නිකන් මොකද්ද වෙනවා වගේ මේ විෂන් එකක් ඕගනයිසේෂන් එක දැක්කම අපිට ඇති වෙන්න ඕනේ, right? Okay, so then we discuss about from vision to mission. Now under missions we discuss what is mission. Now mission is there to achieve your vision, that of course we discuss. Then we discuss what is mission is, what our organization is basically existing for, right? In detail we discuss, and what are the component of a good mission statement, and we discuss 10 of course the 9 components of a mission statement. We use some banks mission statement, and what is the purpose of mission statement, and finally also we discuss the differences between vision and mission, how we differ, right? Vision is, we discuss the futuristic, mission is basically the present. So the moment you look at the mission, you know what sort of business your organizations are involving it. Okay, right. So then we discuss, after that we discuss the value statement. Now today, lot of organizations are develop value statement. I explain that is how your banks carried out your businesses, right? They talk about beliefs, business principles, standards, codes, everything, how your organization behave, we going to achieve. So you are අර අපි කියන්නේ අපි සල්ලි හම්බ කරන්නේ හොඳ විදියට කියලා. අපි සාමාන්‍ය කතාවට කියනවා බල්ලෝ මරලා සල්ලි. එහෙම නෙවෙයි. අපි අපි අපේ ආයතනයේ ව්‍යාපාරයේ ඔබ්ජෙක්ටිව්ස් ළඟා කරගන්න යන්නේ සර්ව සාධාරණ ක්‍රමවේදවලට අනුව. And we are recognizing the employees, we are recognizing the environment, and like that, right? And then we discuss how it's important setting and publishing corporate values for company, right? So we discuss vision, mission, values, and then we intend to discuss from missions to goal. Goal also very broad one, where missions are there to achieve your what vision, and goals are there to achieve your missions, right? Okay, then we discussed from goals to objectives, right? So we discuss what is objectives and things like that. So now I'm going to commence today from that point where we have left about the objectives. Okay, clear? Any questions put up to now, students? Any questions up to now? We have discussed detail what we have discussed very briefly, what we have learned last time. Okay, Sadhu, okay, the Theravada Sadhu? Sadhu, you are there? Sadhu? Sadhu?
Yes.
Theravada, right, okay.
Yes.
Okay, then Rashmi, you are okay, Rashmi? Rashmi?
Yes, sir.
Right, okay, good. So I will just ask whether you are there, right? Otherwise, I'm just telling that's a disadvantage of online lecturing, right? Okay, so now we are moving to the question, the day 2, right? Then of course if in fact we discussed a little bit of objectives, and in fact if you really look at it, this year's DABF, Financial Institution Management, they asked this question: what are the characteristics and objective, explain, right? Okay, so there are four important is what you call the SMART, right? I'll explain to you the acronym you SMART. SMART mean S means specific, so that of course we discussed last time. So you can't say improve performances, right? I mean, it's very vague. Otherwise, you can say either improve operating profit, improve the market share. So then you are specific. You know what is you are going to achieve. Then it should be measurable. Now, something you cannot measure, you cannot put. Now, improve image is can measure, but it's very difficult, right? Now, say for example, profit, market share, productivity, turnover. So you can measure, right? Objective should be measured. Third important character is the achievable. Now, I just keep on you. If you say, when you set your objective, you are going to achieve the market share. Today, market share is 10%. 2024 you're going to achieve the say for example even 15% is little more, so that means you can't achieve. So that is, you can't set objective for unachievable, but you must have a challenging objective, remember. But you can should be an achievable and something motivating. Challenging also important, but not achievable, right? And then we discuss about the relevance. It should be linked what you're talking. And the last one, we say it should be time bound. So that is how the word smart comes. So that also we discussed last week. And then we discussed there are several functions performed by objective, right? I told you to remember the word prime. What is the word prime? Abbreviation white, like smart, here prime. What is prime? So planning. So the objective facilitate for planning purposes. Why? At the planning we set objectives, right? And also responsibility, PR, right? Responsibility, because once you have the objective, you know who is going to do this job, who is the responsibility of this task, right? That's the important thing. The third one, because objective will be integrated all among. I told you the strategic planning is congruence. That means joining together, integration also objective. Now everybody's know our bank is going to achieve 12% market share. That is integrating all the people, marketing, finance, all. And also motivating. Why? Because we set a challenging objective, challenging target. So therefore, it's motivate for you to achieve that target. And finally, that is M, right? Then evaluation. So how do you know whether what we achieve or not? But that objective, this facilitate for us to evaluate. So if you say 12%, after completion of three years, we can evaluate actually how much we achieve. Have we achieved 12%, or have we achieved 10.5, 11%, 12%, for even 14% or 15%? So therefore, objective facilitate for us to achieve our evaluate our performances, right? So that is what we call prime. Right now, you look at it when you talk about the objectives, you need to remember two things. What are the two things? One is an smart, other one is prime, right? Okay, so we discuss in greater length. So this is, and then we discussed last week also to some extent about the Peter Drucker, right? We discuss about the Peter Drucker. I explained to you he's the father of modern management, and he's the person who developed the important concept of what? Efficiency and effectiveness, right? Efficiency and effectiveness. I think now you will recall, because efficiency mean what? effective mean what? Because your resources are, remember, very scared, right? So why we need to plan? අර සින්දුවක් තියෙනවා නේද? ඔගොල්ලෝ අහලා තියෙනවනේ. මොකක්ද ඒ සින්දුව මතකද? කණ්ඩ දෙනවා නම්, බොණ්ඩ දෙනවා නම් මොනවටද තවත් අපිට planning. No need. If you have enough resources, right? Why you need to plan? Because why you need to plan? Because the so-called resources are very much scarce. So therefore, we need to maximize utilization. How utilize? Efficiently and effectively. That is what Peter Drucker came with this concept, right? Okay, right. Then, having understood the what Peter Drucker said, he's a famous guru. He said, for suppose your bank, if you want to set objective, corporate objective, or what you call strategic objective for your bank, these are the some 8 areas you can set. That is what you call key results areas. Suppose if your bank want to set objective for your organization, so out of this, they can use it any of these. One, market standing. Market standing means what you call the market share. Innovation. So you are the company, always come. Now, you may noted that if you talk about the Sampath, always telling we are the first innovated bank, right? Or some banks are say productivity, improve their productivity, right? Then some are say resources utilization. Some people say most profitable bank. And our job is to develop our employees, right? And we have a good relationship with our employees, and we are very much concerned about the social respect, right? Social responsibility. Some people are talking about CRE, CSR. So these are the 8 areas, yeah, you may use, but most of the bank may use either market standing, profitability, social responsibility, and anything. But any bank can set these 8 areas for setting their objectives for organization, right? And likewise, like that we discussed, there are 3 levels of objective you can set in the levels like corporate strategies, right? And likewise, here you said corporate objective, tactical objectives, so that is what you call business level objective, and the operational objective. Now, if you take an example for these corporate level tactical objective, what example for this? Right now, strategic objectives are reached by following the set strategies, like I explained to you. Example, right? You take, what is it? To increase the ROI annually by 12%. That is your corporate objective, right? Return on investment. So we need to improve 12%. The tactical objective mean in order to achieve that, to increase the sale of product X by 20%. Now, say for example, tactical objective mean, okay, we want to improve my sales volume or improve my certain loan portfolio, but certain percentage. That is the tactical objective in order to achieve my ROI. Then it comes to the operational level, to increase the awareness of products, something within the next 3 months, or maybe operational level. So take the first one, in order to achieve your lending, right? What are your operations? You need to give at least improve application, maybe presently 50, you need to improve up to 75 or 100. So all loan application you are not going to process now, right? So that is your operational. So you need to take at least 100 applications, loan application. You will process 50 of that. Earlier you have done only 25. That is operational level, right? So this is how your objectives are set, right? Okay, after all, you understood about objectives, right? Right. Now, I just want to tell you a small thing. I hope, I don't know why students are not much participating as an important area. Definitely, I want questions come on this, and also it's good for your if you want to go up the ladder for one day to become AGM, DGM, or whatever. So you need to have a knowledge about strategic planning. Right now, honestly, I just want to tell you, Puta, students are just following lectures or attending these courses for the sake for two things. One, to sake of following. Second one, for your exam, maybe your exam, or maybe your for next promotion at some 5 marks or 10 marks, right? But it is not the case if you are going to stay in the banking sector, Buddha, right? Just qualifications won't matter, right? I was telling you important thing. Qualification doesn't matter, right? I'll just give you, right? In our life, in our this thing, it's an asset. Qualification in asset, but remember, these are expiring asset. Qualifications, your knowledge is expiring. Every day is expired. What you learn, maybe it's not. So then, what is not expiring assets is the learning, right? Knowledge is something. So it's good to have a qualification, but having a qualification, it doesn't show you or reflect as a good manager. Why? Because it's come the intelligence. Because what you have knowledge, what you have developed, what you have learned, you need to practice. So that's come the intelligence. So that is why. So I am one time in the board of directors in the IBSL. So we had a lot of issues, right? Because when you go to the, I'm just why I'm sharing these are important for you all, Puta, right? When you go for marketing, maybe last from the CEOs of banks, yeah, they said, okay, banks shouldn't have qualifications, but they don't know how to apply these things, right? So therefore, qualification is not enough. It's expiring assets, but what you need a learning and intelligence. So that is how you differentiate. So how you apply your knowledge. This is somebody said having a uh, diploma in bank finance and bank management, finance and bank management. So good. Then somebody asked from you one small question about the strategy planning, for example. Right? If you don't know, what happened? What happened? So then you are not justify your qualification. Right? If somebody asks something about the strategy planning, because it is there in your syllabus, not only my subject, any other subject. If you're not in the position to answer, what happened? So the quality of your qualification as well as IBSL and yourself also deteriorate, right? So if you want to know, so at least you try to understand, right? Passing just exam is not enough, right? You need to get knowledge. At least you yourself, you're satisfied. You know what is we are talking. Okay, I'm just give you a food for thought, right? Remember, the knowledge is expiring. Learning is never expiring because every day you are learning. And also remember, another important thing is you need to have a intelligence. Okay, now from that point, up to now, have you understood? Yasodhya, okay? Yasodhya, you understood up to now what we have discussed?
Yes, sir.
Right, okay. Then Ishari also, you're okay, no, Ishari? I'm pronouncing your name is correct, Ishari?
Yes, sir. Yes, sir.
Right. Okay. Right. Now we're moving to the next point, right? And another important thing is the policies. Now you may come across a lot of policies. Now may policy and other policy the policies pratipatti. Now you discuss we earlier we discussed vision and mission, right? Earlier when we studying long time about the MBA, there is not vision statement, right? We learned mission and vision, but later only that vision statement came. Because why the vision, the value inbuilt to the mission statement. Now they have taken out, right? Because the value is icing the cake, right? Like, okay. Now the policy is, it's a give you a general guideline for decision making. Whatever you do, you need to have a framework. Policy is a framework, right? And this is within this framework you need to work now, right? So that's a policy. So policy also is a part and parcel of the where you are going to be. So your targets, your vision, missions, whatever you develop, and you are trying to your objectives are trying to improve or implement through within these policies, right? So the policies also play an important role, because your organization policy, within the framework of your policy, you do everything, right? Okay, so now that is what we have discussed, the T2 and T1. Okay, so now from today, so we are going to discuss another important area, right? Earlier, the first day we discussed the importance of strategic planning, and the one import we are trying to answer one important question: where my organization is going to be, right? That's the first question. I explained to you at the very beginning. There are three questions asked in the strategic management process or strategic planning process. One is where your organization is going to be. For that, we discuss vision, mission, values, goals, objectives, and policies, right? Now we are going to discuss today the important area: where is my organization is today, right? That is called the strategic analysis. So you as a businesses, you need to constantly evaluate your business position, right? Then now I will just give you an example. ඔගොල්ලෝ හැමතිස්සම ගිහිල්ලා කොණ්ඩි බලන්න මොකක් කරනවද? Then while you are working also, you go to the washroom and see whether your face is correct. කොණ්ඩි පීරලාද, facials එක හරිද, පොඩ්ඩක් touch කරලා ආයෙනවනේ. Why is that? ඒ කෝරියන්ට යව කණ්ණාඩියෙන් බලනවා. සමහර අය 3-4 පාර බලනවා. ඇයි එහෙම බලන්නේ? Because you are evaluate yourself, your present position. Right? So that is one also. Likewise, strategic analysis also, you need to find it out your current position, where your organization is. Right? Now for that, we need to use a different technique. Right? So how you going to find it out? Different techniques. Now we are going to discuss the second question: where are we now? Okay, earlier we discussed what, where do we want to be. Now we are going to we discuss here. Right now what we are going to discuss, try to see the first part, right? So that is, where are we now? So how do you know? How you going to, what are the techniques available? Right? Now remember, the manager's perceptions of uncertainty will be increased by two factors. Right? So okay, where are you going to be? Okay, so it's techniques, two things: complexity and the dynamism. Now what do you mean by the complexity? Right? Now number of variables, right, which can impact on the organizations, and how difficult they are to be predict and understand. The Islam හඳුනාගන්නේ කොච්චර complexity. You know, there are a lot of variables incorporating to the strategy plan, difficult to understand. So therefore, we cannot predict where we are going to go. The dynamism, right? The rate of change. The things are keep on changing. We call them as a dynamism, right? Okay, we learn business need to have a dynamism. So without risk, right, you cannot live. There won't be a dynamism. Why people going to take the risk? Because you need to carry out your business with the dynamism. Now, to what extent you're going to face these challenges, how this quickly change your environment, these are the important things. So because of that, so if you can think your planning horizon may be reduced. That is why I explained to you earlier, when we are small, we prepare a plan for 10 years. Then after that it's come to 5 years, now 3 years. So why planning horizons reduce? There's a lot of uncertainty available, right? So we need to understand all these things, and having understanding everything, we move into our present position. So this is what you call the business environmental analysis, right? So we are not going to look at it our own. So this is the one we are going to look at it, three areas. One, your internal area, that means your organization, your environment which is more close to you, where your customers, your competitions, your supplies, and also the factors which are little away from you. That is what you call the external environment. Right now, if you really look at it, your business environment, I think I don't want to explain. There are three things. We further divide it to internal, micro, and macro. Or sometimes some people can like internal environment, task environments, and general environment, right? So there are different scholars use different techniques, but basically you look at internal environment. Your micro environment means the environment which is very close to your organization. Then there's those are away from you, the macro environment, right? Okay, so then what is why we need to analyze the environment, right? Because where these threats and opportunities are coming. So these threats and opportunities are coming from where? From the external environment, right? So how we are meeting how we are going to meet those threats and opportunities by using our strengths and weaknesses. So that's the internal environment analysis. Threat and opportunities in external environment analysis, right? And then we are going to look at it, who are our stakeholders and who are our competition. So we are going to discuss all these things under this. Right. Having understood, for the technical word we are using here is what you call the corporate appraisal, right? It's a very interesting area. Remember, corporate appraisal. Earlier we used to talk that SWOT analysis, but the present day we talk about SWOT analysis as corporate appraisal, right? So this year's, if you again, if I'm going to explain to you the students who set for your DBF exam this January, one first question in the institutional manager where I'm lecturing, first question is this: what do you mean by what is SWOT stand for? What is SWOT stand for? First question, right? What is SWOT? SWOT means strengths, weaknesses, opportunities, and threats. And you're going to analyze your internal strengths and weaknesses, your own organizational strengths and weaknesses, and what are the opportunities available in the market for you to grow, and also identify what are the threats you're going to face from the external environment for you to challenge it, or you to face it, or you to absorb, or you to survive. So that is basically corporate appraisal. So modern way we call them as SWOT analysis, right? And SWOT analysis, as I explained to you, is like at any given time, this is your organization's look like, right? And remember, SWOT analysis is also equal to your balance sheet, right? Now, SWOT analysis also equaling to your balance sheet. Why I'm saying it's equivalent to the balance sheet? Because the balance sheets that give you at any given time a financial position about your organization. But what SWOT tells you, this is your any given situation, this is your position. It's like a mirror, present position, right? It's like a balance sheet, right? So that is why it is important. It's talk about uh, uh, so many things, right? Let's look at it. What are the elements of SWOT, right? Okay, so now what we are discussing, analysis, strategic analysis. For that, what is my organization? Right? For that, we need to identify. ඒක හරියට දැන් අපි හිතන්නකෝ ඕගොල්ලෝ ගිහලා fully body check up එකක් කරනවා. මොකක්ද ඒ කරන්නේ? ඔයාගේ කොහොමද? ඔයාගේ strengths මොනවද? ඔයාගේ weaknesses මොනවද? ඒවා හොයනවා. Right? So likewise, now for that we have what are the analytical tool available? A resource audit, Porter's value chain, PLC, Bcg, Gap Paralysis, right? Benchmarking. So these are the analytical tools we are using to find out what is your present position, right? And available in the market, threats and opportunities, we are using Pestel Analytical, we are using Porter's Five Forces Analytics, right? Now remember, when you go for your MBA, higher study, PhD or whatever, these are the things you are going to learn. Now what I'm going to give you something you need to give you food for thought for how you analyze your present organization, bank, or your branch. Suppose if you are working in the branch, or suppose you are working in the division, or even for your bank. So this facilitates, these analytical tools, right, facilitate to identify your strengths, weaknesses, and the opportunities and threats. Okay, clear, right? Okay, so then SWOT analysis, therefore, what we are using. So you find out your strengths and weaknesses as I explained to you, right? Value chain, core competencies, PSC, BGC, and things like that. Okay, right. Then what are these advantages of SWOT analysis as I explained to you? One of the advantages of SWOT analysis, mind you, it is very simple, easy to understand, right? That is a beauty of SWOT analysis. Very simple, easy to understand. The strategy at any given, everybody can understand. What are the weaknesses is the simple itself, right? And also the one of the main disadvantage of SWOT is, right, it's give you any given time, at any given time. So therefore, now today people are changing the word periodic SWOT analysis. What do you mean by that? It need to be done regularly, because today's position, it may be have not the same position, maybe another 1 month's time, totally different. So therefore, today people are talking about periodic SWOT analysis. Okay, right. Up to now, have you understood? Ruchika, okay, have you understood, Ruchika or Ruchika? I don't know. Puta, you understood? රුචිකා තේරුණාද? රුචිකා ඉන්නවද ලයින් එකේ? රුචිකා, you understood? රුචිකාද? Right, come up there. Right, I'm just හිතුවා පොඩක් බලනවා ඉන්නවද කියලා කට්ටිය, right? Okay, going back again. Now we are going to discuss about the external environmental analysis, right? Okay, so first we take the political factors. We call them as a external and environment analytical. What is the abbreviation we are using? Simple, that is called pestle analysis. Pestle analysis. Why you call pestle analysis? Political, economic, social, cultural, technological, environmental, illegal. So that's simple as that, pestle analysis. Okay, now why this important? Why this important for bank? Now these days you must be having enough political factors impact your businesses, right? What good and services do government want to provide? What to what extent is being the subsidizing firm, policy stability, orientations, policy and blah blah, trade union power, foreign trade regulation, taxes, embargoes, all right. So you can understand to what extent these factors are impacting us. So, for example, the international relations, right? Consumer protections, so social welfare, good governance, advertising standard, blah blah. All political factors impact your business. Then, second factor is economic factor. Now that's an important factor. I think you may heard about recently the government increased the policy rates, right, from 5.5 and 6.5, standing deposit rates and the standing facility rate. You know the economic factors. Uh, what is the December inflation rate? Can anybody tell? Huh? What is the inflation rate in December in Sri Lanka? Can anyone tell? Ishari, what is the Rashmi or whoever, Mohammed? What is the inflation rate last month, December? Right? Is around, market rate is gone on 12%, right? So it's more than our deposit rates and market liquidity is there. So therefore, inflation rate high, so people may not deposit with the bank because the money value, because the depositor facing an inflation risk, right? Okay, so therefore it's impact our businesses, the growth factor, right? So you noted that there are so many factors, interest rate. Now that is one of the reason why they have higher the interest rate to absorb some liquidity available in the market. Otherwise, inflation rate is further going, and strong currency, right? Unemployment, income, those are economic factors which impact the businesses, right? Okay, that I don't want to discuss all these things, the GDP, exchange rate, right? Inflation, interest rate, tax level, right? All are play an important role because we need to take into account all these factors when we are developing our strategic plan. Right. Then you may look at it the social cultural factors. So main important factor is the demographic, right? How the Sri Lankan population. Now based on that also you can come up with develop different products, right? Based on the, a lot of banks are introducing new products based on the demographic factors like children savings account, youth account, uh, senior citizens account, then ladies account in terms of gender, uh, ladies account, different types of account, right? And then the educational levels, right? For university students, we give house loan for education purposes, right? So there are a lot of social factors and a lot of girls are working. So therefore the banks have changed because open to digitalization, 24/7 banking, right? People have no time to go to the branches, do transaction. Right now, you imagine, and people don't have money, uh, so they use the credit card or whatever to buy products. And if you look at from the consumer's point of view, how they decide moving uh, from washing to washing machines, uh, from oven to a microwave oven, like that. There are a lot of factors and takeaways shops, how they created, and how the daycare centers created because of the social factors. So you need to understand all these sectors before you are setting for next, right? Okay, then you look at the income distribution, of course, yes. Then the technological factors. That's the most important factor. So the technology impacted two important areas. One is the banking, other one is the communication, right? Its technological factors really impact, especially for communication business as well as the banking business. Now you look at it today, to what extent we use the technology. So we are going for a digitalization world, right? The total market of digital economy in Sri Lanka is around 4.5%, 4 to 5 billion. But there are some other countries like India and all 35 billion market on the technology, digital market, right? So huge amount, right? So therefore banks need to understand what is happening in the technological area. That is why we have a cash recycle machine, right? CDM machines, a lot of new areas coming, digitalization, okay, right? Even for open banking, all are due to, and fintechs, all are came because of the technological development. To what extent the banks absorb these technical development to catering to our customers? What are the technological changes taking place in the external environment? Whether banks, to what extent your bank are absorbing or using these technological changes when you're compared with the bank C? Where are your position? You need to understand. We are talking about common KYC today, all right? Now we are talking about the QR. A lot of banks are initiating QR. So what is QR? We imagine just how we move it from slips to SEFT, right? What is the development, right? Okay, so you need to understand technological changes, right? Then another important thing is about the legal factors. Now, what is legal factors? How it contributing to us? Good example is the nomination. The nomination facility, Parat execution. Of course, we have postponed, that's a different story. But the legal factors, how it impact your businesses, signature, act recently changed. Now, a lot of organizations accepting the digital signatures because there's a law of us in the area. Then there's a data protection act is going to come, right? So how these factors going to come to you, right? Remember, and also now today people are talk about uh, legal documentation, especially for dealing with LC opening, right? Remember, then this comes the environment, the climatic issues. Now people are talking about the green financing, green investments, right? Okay, so they are issuing green bonds rather than other bonds because the climatic factors play an important role, right? So there may be a risk going to come. Now we have every bank is today in the world facing three things. One is pandemic, other one is the green issue, the climatic change issues. right? Third one is a debt. That's a every country. Every countries in the world are facing three things. One is the environmental issues, climate issues. First one. Second one is the public debt, right? That's also play an important role. And the pandemic, right? How bank play a role in here, right? So that is why we need to understand. That is why banks comes to for risk. Look at it whether you are giving a loan which is an environmental friendly loan. To what extent you are, use your carbon footprint. When you're granting loan, to what extent your loan used for a damage in the climatic factors. So you have a risk management now on that area. There are separate called the green financing and green investing. We look at it, the three important factors: social aspect, environmental aspect, and governance aspect. Right? So environment play an important role. So you need to look at it in the future. Your main business of granting loans or issuing debentures or issuing bonds. A lot of organizations are using green bonds. All right. Okay. So we need to understand. Now I think you understood about the important thing about the pestle factors, right? Clear? How important the pestle factors. Mohammed, you understood about the how why you need to look at it, the pestle factors, right? When you evaluating, when your preparations about your strategic plan. Mohammed, you are okay? Understood? How pestle factors impact or why we need to look at it. This how your present businesses are impacted with your present environmental factors. How is it there on the moment? You are okay on that pestle? Mohammed, you are there? Right. Ishari? You understood, Ishari? The factors?
Yes, sir.
Right. Okay. I need some sort of a support, right? I also otherwise boring or lecturing now, and if you are not interested, right? Okay. Right. Right. Then we look at what are the usefulness, and the pestle play and therefore important role in day-to-day business when your preparations of analysis, and it's also give you, remember, the inputs to your organization. It's give you inputs to your organization, right? So one techniques we have discussed. What is the one techniques we have discussed? Find out where your organization is, and mind you, there's a now we call environmental pestle analysis, and also the nowadays we talk about the forecasting pestle. What do you mean by a forecasted festival? That means, okay, what may going to happen maybe in another 2-3 years time, because you prepare your strategy plan for now as well as for another 3 years. So what may be happen in the future? What is your LCs? Whether it's going to impact? How about you are going to be uh, interest rate? Inflation is going to be. That also you need to understand. Right? For that, you may have a techniques, what you call forecasted technique, like Delphi techniques, scenario analysis, impact analysis, expert opinion. There are techniques available, regression analysis, smoothing analysis, like that. There are techniques also available for you to predict the future. Like අපි දැන් ඔය හදාන අරන් ගිහිල්ලා අපි යනවනේ ශාස්ත්‍ර කියන කෙනෙක් ගාවට. එයා මොනවද කියන්නේ? එයත් කියන්නේ ඒකමනේ. ඔයාගේ හඳහන බලලා නැත්නම් ඔයාගේ අත බලලා he predict your future. ඉතින් ශාස්ත්‍රකාරයාට ඔයාගේ අත බලලා ඔයාගේ හඳහන බලලා කියන්න පුළුවන් නම් නේද? ඇයි අපිට බැරි කියන්න හඳහන බල්ලා අනාගතය. Right? So that also play an important role. Right. Next techniques, what we are going to discuss with you, we call industry analysis. Now you need to understand, now suppose you are a bank, what is the bank in industry? How it behave? How it's working? Right? For that, we use important analytical techniques. It's called Michael Porter's 5 forces technique. It's talk about your industry. Now you are in the banker, so you are in the banking industry, or you may in the financial industry. How this industry is going, how big this industry, right? Whether it's a potential, what are the forces determining your profit in that industry? So that will facilitate for you to understand the Porter's 5 forces. Right? It is a model developed by Michael Porter, and it is useful to generate idea about your position, especially in the business. Now, what is the rate of banking industry is growing? It's around 15% or so. So you need to understand that. So the Michael Porter has developed 5 forces. Now let me try to explain these 5 forces a little bit for you to understand. Right. One, suppose there are 5 forces. Threat of new entrants. Suppose you are in the banking field, there's a new bank coming to your industry. That's a threat of new entrants. Second, a rivalry among existing firms. So that means with your bank, there may be other, say, I told you in commercial bank, how many commercial banks in Sri Lanka? There are 24 commercial banks. Suppose you are a Sampat, suppose you are Bank of Ceylon, suppose you are HNB, there are another 23 banks are fighting with you. That is the rivalry. අලුත් තෙරුන් ආවොත් එහෙම තවත් වැඩි වෙනවා. Right. Then threat of substitute. What do you mean by that? The companies who providing the similar services. Say for example, if you take the commercial banks, there are some other companies like who? Specialized banks, finance companies, fintech companies, share market, stock markets also compete with you as a different mode, even for insurance. Imagine your bank, not only that, you are bombarded, I mean, you are affected by customers from both them. Because customers asking for more deposits, money, asking for more higher interest rate, asking for more facilities, asking for low lending rates. So the power of bargaining is increasing of the customer. As well as the suppliers sometimes. Now, who is supplier? Who providing solutions? Software packages, mobile operators, right? Features, applications, mobile apps. Right now you see to what extent you are using the mobile operating activities, core banking solutions, right? So all these factors are impacted to your businesses, right? Say now when you're developing a product for developing a strategic plan, say suppose you are working for a, okay, we'll ask from one person, Rashmi, which bank you are, Puta? Rashmi, which bank you are, Puta? If you can tell.
I'm working at cooperative rural banks.
Okay, right. Okay, cooperative. We take a sort of a commercial bank. Ishari, which bank you are put? බයනද කවන්නේ කියන්න මම මුකුත් අහන්නේ නැහැ.
I'm working at Nations Trust Bank, sir.
Right, good. NTB, good. Okay, now Ishari, now you take an example. I've just spoke to you to give you an explanation, right? Now Ishari, now say if you want to do analysis when you are going for a preparations of which branch puta you are at, come on, the keyword.
I'm attached to credit operations.
Right, okay, doesn't matter. Right. Now say for example, Ishari working for NTB. Right. Now, Ishari, now you think you want to do a Michael Porter analysis. Example, right? I will just explain to you how you do that. Now say, Ishari want to do a Michael Porter analysis. Now, rivalry. We put NTB here in the metal rivalry. So how many banks you are competing with you directly? There are another 23 commercial banks are fighting, right? For your market share. Apart from that, there may be a new banks. Fortunately, up to now, no threats of new banks, but there is a new banks can come into the that may Ali Madiyata Harakiwa, right? Then you may facing with other all finance companies, insurance companies, specialized license banks, right? Fintech companies. You also fighting, right? And customers also fighting, customers also bargaining, right? You need to come up with new solution. Now, what is Michael Porter's are telling, talking here? You need to analyze what is your present position with in terms of these, to what extent you monitor or what extent you safeguard your existing position while you are competing with your own competitors. Now your immediate competitors are NTB's concerned is NDB, right? Immediate competitor maybe NDB, DFCC, right? Your immediate competitors, but there are some other competitors also, right? Now you need to analyze from where I am going to get the threats, right? So then why Michael Porter is telling, because all these things you need to understand your present position in the competitive position. It tells you what area you need to be protected, what actions, what strategy you need to develop, right? So that is what. Now, say for example, how loyal your customer, suppose your new customers are, new banks is going to come. So you need to look at it, how loyal your customers are, right? Otherwise, customers are, if they're not happy, they may go for new bank. Okay, so these are the some of the point. So you try to identify these new entrants. You try to address all these issues. Then power of buyers. How large your buyers? What are your customer base? Right? Whether you have a small number of large deposit customers or more number of low volume customers. That if suppose your bank is having a credit portfolio of number of customers are less but the volume is high, so then what happen if a one customer leave your bank, it really impact your businesses, right? Understood, no? Suppose if you are maintaining your portfolio of credit is having only a few hands, that is 80-20 theory, Pareto theory. But if 2-3 customers move from you, and it's really impact your businesses. So that is the power of buyers, right? Okay, therefore only few sales, then how can you improve that? You want to give a more low ticket, small ticket customers, then your operation cost going to go up. A lot of things you need to look at it, right? And to what extent you can substitute your suppliers, right? So they are bargaining they are basically challenging your raw materials. right? What action you're going to take? Are you going to take over that supplier? Or suppose, especially this has happened, if you have a small number of suppliers, you need to depend on them. So what action you're going to take? You're going to go for an agreement with the suppliers, continuous supply, right? So these are the issues we need to look at it. And the threat of substitute. Now, fintech companies are coming. A lot of banks are facing issues, right? Fintechs are coming with a lot of new ideas, right? In the world today, there's no banks. Banks are deteriorating. Fintechs are coming up, right? But still, there is a issue. But you need to look at it, right? Then the industry rivalry, as I explained to you, uh, how close your competitors. In the bank, we discuss around 23 competitors. You are direct, and there are some competitors are very close to you, some are little away. Like now, for as NTB is concerned, Bank of Ceylon is having around 3 trillion, as far as against you having around 480 or trillion billion asset. So I mean, so your immediate customers, immediate banks, all are similar pattern, right? So you need to look at it, all these things, before you plan what sort of competitions we are going to face, right? Whether its industry is less so high attractive. In that case, suppose your banking industry is not much attractive, so what are the other areas you may look at it? Bank or insurance, like sometime you need to look at it. Okay, right. And that's just one point. Then again, within the same work, you may go for competitor analysis. Who is your main competitor, immediate competitor? You need to look at it within your banking fraternity. Who is your immediate competitor? Because you need to understand, because the competitor can destroy your entire campaign. So therefore, you need to understand your competitor. What strategies you are going to use, that we are going to discuss our next Sunday, right? So how you beat your competitor, what is the strategy you use it, right? But for that, we need to analyze who is your competitor, right? So what is the level of competitors, right? Maybe some competitors are, I mean, you can ignore it. Now, I tell you a good example here, right? I'll just give you a good example. Then you will see how important this. This is a real example. I will tell you a very good example about the dialogue. Right now, dialogue is the high mobile operator. Uh, One time they uh, enjoyed around 55, 57 market share in the communication market, mobile market, right? So they are the market leader. Then I think you may remember, then they got to know about Airtel is going to come to Sri Lanka. Airtel is one of the leading mobile company in India. So Dialog expect there's a definite threat for them when the Airtel comes to Sri Lanka. So what happened? So Dialog is more concentrated to face if Airtel coming to the Sri Lanka. I'm just referring to three before Airtel into the market, right? Now you know these Shah Rukh Khan is the brand ambassador there, and you know the Sri Lankan people are fascinated about him. And Dialog thought they have a big competition for Airtel. So what happened? Dialog has done a lot of strategies, lot of activities to protect their market share from whom? From the Airtel. Right. In between, while they are concentrating on that, During that time, Tigo, I don't know whether you will remember the Tigo, and they introduced a 1 second package because Dialog is not considering the Tigo during that time because they are a small player. Tigo, mean they are the first people to introduce separate charge current. So then that's another, some said moving to them. During that time, we had a war here, Sri Lanka. Sorry, not the war before that. Then the Mobitel introduced Upahara package. I don't know whether you can remember. For governments, people, Upahara package. Another market has gone to them. Right? Then suddenly Dialog look at, because they are concentrating on Airtel, but their market share going to other areas. They need to look at it, what is happening in the market. Then what happened? The Dialog from their 55 or 60% market share has come down to around the 30 odds because of especially the Upahar. Then Dialog also came up with some strategy. I don't know whether you will recall it now. During that time, there is a war is going on, and the Dialog introduced Ranaviru package. They in fact spend a lot of money for forces, right? Because to overcome that upahar, but it's not 100% successful. Now, what I want to make a point out here, you need to look at it. So Dialog is concentrating Airtel, right? But that's a successful. Airtel is into the Sri Lankan market, but it's not so successful than they expected, no? Right? So good example is how many, you can just check how many your friends are having Airtel number. Like you can see, well, because but they are the giant in India. But once it's come to Sri Lanka, they are not giant. So in that sense, the Dialog strategy is good. But while they are concentrating on that, they may not look at the other competitors. So that is why you need to analyze your competitor, right? And also you can't look at it as smaller competitor. You don't want to spend more money for that, but at least you need to look at it, who are your immediate competitors, and take actions. Okay, I think you understood that. It's a real life example I've just quoted to you. Hari? Okay. Then we look at it, the competitors, right? Okay, don't forget about, right? Okay, now what we have learned now up to now, we learn the pestle analysis and Michael Porter's 5 forces analysis. Okay, and also we learn about the important area of the other and the competitor analysis, right? And also now we are going to look at it. Another important aspect, these are external factors. We need to look at it, our internal factors, internal analysis. So internal analysis means how good your organization is, your bank is. That for that you may have two important techniques. One is, we call them as BCG, and other one is PLC, product life cycle and business Boston consultancy group. What is these two methods? I'm just going to discuss with you these two products with you. One, two techniques. You need to analyze your product portfolio. For that, you need two techniques. You can use two techniques. One is Boston consultancy group and product life cycle. Okay, we'll take the first, the product life cycle. Right? What is product life cycle? You know, as human being, every product going through a lifespan, right? And if you really look at your product life cycle, it's usually divided into, these 5 main areas, right? And product development is the new product development stage, right? And then once you launch to the market, you look at the sales or the businesses you are generating. So along with that, you noted there is a profit also increasing, right? And the product life cycle is usually consists of 5 phases: product development, introduction, growth, maturity, and decline. The product development stage is what you call the uh, initial stage, because it is it's like an embryonic stage. දැන් අපි ජීවිත කතාව ගත්තොත් මිනිස්සෙක්ගේ embryonic stage එකේ තමයි development stage. බබා හම්බෙන්න ඉස්සෙල්ලා අම්මගේ කුසේ තුල. Right? So for that, then ඊට පස්සේ once you give birth to the child, or once you introduce this product to the market, we call them as an introduction. Right? So that is what you call this one, introduction. Now the product, once you market the product, so you need to spend a lot of money. Why? A lot of money you need to spend for creating awareness among your customers, right? For that is why their cost is, the cost is coming down. The profit is negative because you need to spend more money. Developing a product also costing, introducing your quantity. So then you introduce to the market, now the sales are going increasing. That is your growth stage. More products. Now, say for an example, you introduce a children's savings account, example, in your bank, right? So you develop the new product. I'm not going to explain about the new product developer. So anyhow, you look at it, what are the other banks are giving. So you introduce a new product development. Then once you introduce to the market, you have a big some campaign, advertising campaign, saying we have a new product called children's savings account. So now the product is catching up and increasing the sales, right? Okay, so that's the introduction stage. Why? Sales are low at the introduction stage, high cost per customer because you need to spend for money. Profit minus, right? What is objective? Is to create awareness, because people, in order to buy the product, people must know the product, right? Okay, so the next step is the growth stage. Now here, as I explained to you, the product is now growing. Now let's look at it, the characteristics of growth stage. What is sales? Now sales are now going up, cost coming down because average cost per customer, the profit also rising. Now you look at it, your market share also increasing because you are going towards that, right? Okay, right. That is your growth share. Then you go to the maturity stage, and there, of course, you have a peak sales. You have a peak sales like that. You have a peak sales. Now your high profits. Right. Now what is your objective? So you need to maintain your market share. Then අපි තු සරල අපි කෙනෙක් රූප සුන්දරී වෙනවා. කෙනෙක් අපි හිතමු රූප සුන්දරී වුණාම එයා ඊට පස්සේ මේන්ටේන් කරගන්න එපානේ යාගේ බියුටිනස් එක. නැත්තම් නේද? ඒක කතා කියනවනේ. So you have to maintain. Now that's the challenge. Right? You need to understand that. Otherwise, what happened? If you have not done something, product has come down. Because what is the next stage? Is a decline. Now, I'll give you enough and enough example for this. Right? Enough and enough example. Now, take good example. Take the sunlight. Take the sun, lungs. Now, you noted that the sunlight started with කහ පාට මතකයිද? ඊට පස්සේ මොකද? sunlight සුදු වුණා, sunlight කොළ වුණා, sunlight ඊට පස්සේ detergent powder එකට ගියා. Right, look at the lux. Now look at the lux. What? The smell. Huh? Nilmanil, Samampicha, Aralia, then Sakura. Right? Because they want to relaunch the product. Otherwise the product has come down. Right? So you need to analyze all these things. Right? That is what you call product extension. Otherwise product is going to decline. Now why we going to learn all these things? Right? We need to have a strategies then and there. Otherwise products down, away from the business. Now why we need to explain all these things? Now take your bank. You may have a different type of brands, different type of lending products, different type of liability products, and different type of assets products like loan and deposits product. Right? Check your children's savings account, take your senior citizen account, take your ladies account, and take your normal savings account, current account, and analyze using this product life cycle. Where are your organization? These products are at the moment. At the moment. Suppose your products are at the growth, what you try to do in order to bring to next stage, maturity stage. Suppose your products at the maturity stage, what you need to do to keep you the same stage or without going down further? What action you're going to take? Likewise, your product portfolio you need to analyze. Then only you can take decisions. What strategy I'm going to use? That is why PLC is there. That is why product life cycle is there. Okay, I think you understood that concept, product life cycle. How you can make use of this product life cycle to analyze your product portfolio. Right? Okay. So have you understood anything you want to explain? Emalka? Okay. Emalka, you understood how, to what extent we can make use of the product life cycle to analyze your product portfolio?
Yes.
Sure, no? Right.
Yes.
Okay. Right. So it's very interesting. That is why we have a, you noted that especially banks are not much heavily used, but you see the Unilever, how these people are use these techniques, right? They know. So they have noted now, I just give you an example. They have noted that one day the soap going to die. One day sunlight, you noted that is going to die. Because why? A lot of people may not use now sunlight for washing. They are moving from, because of the standard of the living of people are growing up, they are moving for washing machine. So therefore no soap demand, but they had it maybe couple of years ago. Now what they did, they slowly converting sunlight brand to what? Sunlight powder. Now they say they may use for the washing machine as well. For that they add value, they add ingredients for smell. Right? The people like the smell. That is how they add value and converting their products. So otherwise the product's going to die. Now some of the products you may, I don't know whether you heard about, have you heard about SR? Have you heard about SR? Is a toothpaste. Now is SR is no more there. Have you heard about the Rexona soap? Anyone heard about the Rexona soap? Where's that Rexona soap? මතකද ඉස්සර ගියා අම්මා දුව වගේ දුව අම්මා වගේ කියලා Rexona ගාපුවා? Where's Rexona? There's no Rexona soap now, no? That's gone because it has increased and declined. The two classic examples of Unilever products are not in the market is SR, the toothpaste, and the Rexona. Because brand names are well aware. That is why they use Bhati and Santosh to change their soap to deodorant. Rexona deodorant, but in Sri Lanka, deodorant is not work because of the tropical nature of the country. නේද? එහෙම ගාපු ගම මොකද වෙන්නේ? අර වෙට් අපේ තියෙන ඩ්‍රයි වෙදත් එක්ක දාඩියත් එක්ක මිශ්‍ර වෙලා අමුතු සුවඳක් එනවා. Right? So that is why it's not so successful. Not like other countries, but here you see, so in Sri Lanka, it's not much successful, but they used to relaunch the Rexona because it's a very famous brand name. Everybody is aware. So they don't want to tarnish the brand name. They converted to deodorant by using Bhati and Santosh. ඇයි Bhati Santosh ගත්තේ? දැන් ඒගොල්ලෝ ගානුවොත් කමක් නැහැ. දැන් අපි නිකන් කොල්ලෝ ගත්තොත් එහෙම එකෙක්වත් ගාන්න යන්නේ නැහැ. භාතිය සන්තුස් මේවා ඩියෝඩරන්ට් පාවිච්චි කරනවා කිව්වම අනිත් කොල්ලොත් ගන්නවා. නැත්නම් වෙන එකෙක් පාවිච්චි කරොත් ගන්න නැහැ. But that also not a successful one. So, but that is what they did analysis. They're using BLC, right? Okay, another important techniques we using here we call Boston Consultancy Group. That is called BCG Group. That is which was developed in 1968 by BCG Boston Consultancy University, and they said in all your brands, all your products can be divided into 4 quadrants. They use 2 X and Y axes. You call X is market share and the other one is the market growth. Now this is the BCG matrix. If you say why you call matrix? Why you call matrix? Because you have a 4 quadrant. That is why I call matrix. And they have identified all your product lives, like products available in the bank, can put into the 4 areas. Based on what factor? The market share and the market growth. They have identified, these are common. If your particular products in the banks are having low market share, but high market growth, they putting as a question mark or problem child sometimes. The market share is high, market growth also high, they put as stars. Then if the market share is high but the market growth is less, we call cash cow. And dogs, paraballa, low market share and low growth. Now take your products in your bank. Take your products in your bank. Whether again I'm telling you services or whatever, you have a current account, you have a fixed deposits, you have a savings account. For example, will you take these 3? You have a 3 products, right? You have a overdraft, you have a savings, you have a current account, right? Now take this example. So you analyze your market share and your own bank. Now there are a lot of software packages are available now, right? You put the figure with the total market share, mean total divided by your figure into 100. That is, you know your market share. Based on that, you put, you know, the lot of banks. That is why they are measured CASA, current assets savings account. If the lot of banks around 35%, if your CASA percentage is high, mean what? You are putting under stars or cash cow. Why? Because where you give the higher profits, low interest. But if you give the FDs, you are giving a little higher interest. So based on your product portfolio, you putting your products into different quadrant. Then you know what you need to do to convert your questions to stars or stars to cash cow. Cash cow කියන්නේ කිරි දෙනෙක් ඉන්නේ. මෙතන කිරි වෙනුවට දෙන්නේ මොකද්ද මේ හරකා? සල්ලි. Because these are the products, especially if the bank you are having higher current account balance, they are the cash cow. Why? Because you don't want to pay any cents as an interest. You will charge checkbook charges, issuing overdraft. From that also you are earning, right? So you earn a lot of money in your cash cow. Suppose your FDs are in the question mark. Suppose your FD is in the, suppose your current account in the question mark. What you need? That means there's some problem. You want to convert your current account to the either stars to the cash cow. For that, what you need to do? That is why we have these techniques. Identify your present products and see what you can do for that. So these are two techniques we call product life cycle techniques. What are the two techniques? BCG and PLC. Now I think you will understand, right, how important these two techniques to identify and put into the these levels. Right? Sadun, Terunanda Sadun? Sadun? Okay. We are discussing, right? Still we are discussing, Sadun, how we analyze our present situation. For that, we discuss one technique we call pestle analysis, right? And we discuss the other one is Michael Porter's analysis, right? And then we use techniques called product life cycle, and we use the technique called BCG, all facilities to understand what is my bank's present situation, right? Okay, now I think now you understood these, what you call stars, cash cow, problem, child's, dogs, because these are specific features. You try to understand your product and fitting to this group, then you will understand, right? Then you're going to look at it, another important thing to analyze your own present situation. That is what you call a resource audit. That is what you call resource audit. So what do you mean by a resource audit? Now you're going to look at it, your resources. Now what are the resources your organization is having? Manpower, money, management, machinery, markers, material, financial, physical, or human. What you call, you have a resources. Now what is important in strategic planning? How you use these resources, right? Now the resource audit technique, we are going to use this. To what extent we are using these resources in a unique manner? Are we just spending money? Are we efficiently utilize these resources? Right? So you need to analyze. අපි දන්නේ හරියට මේ සල්ලි වල අපි මේ අපේ ඒවා නිසි ආකාරයෙන් ප්‍රයෝජනයට ගන්නවද කියලා. For that, we have what you call VRIN approach, right? VRIN framework. What is VI resources approach, VRIN framework? That is, V mean valuable, R mean rare, I mean inimitable, N mean non-substitutable. So now let's look at it. Right now, Remember, a lot of organization competitive advantage may use it. How you're using your resources. Now let's look at it. This word, this abbreviation one by one. Valuable. Now, value play an important role. Why? Because every banks, every customers are look at it what? The value. What value gives me? You go and marry a girl or boy, a girl. What is the factor you look at it? What sort of value is she or he given to me? Maybe in terms of economic, in terms of emotional, in terms of material, whatever. Customers are buying products for values. That is sometimes we call CVP, customer value proposition. If any bank can give more value to their products, customer will buy. That is why customers are buying your bank products than your competitors, because your bank will give you high value to, right? So how can you give value? So efficient use of your resources. That is V. Then you look at the REA. So that is difficulty, long-term sustainability. So it's very difficult to other people to copy you, your resources. Take for example as, right, your certain product. Now say some products are, why it is very rare, it's not available everywhere, right? So your resources are very rare. Third, you cannot copy it. Take your employees, take your offers. It's very difficult to copy. Your resources, human resources is one of the important resources. You have a talented workforce. You have a good organizational culture where you cannot, other bank cannot copy it easily, right? So you look at it that, right? And you look at it, your competencies, right? In terms of your knowledge, your employees' knowledge, your technical knowledge, your know-how knowledge, or whatever. So these are strategic capabilities. So through the resource audit, what are going to look at it? To what, how you can use your strategic capabilities. How efficiently are you using your resources? That's important, right? Okay, so that is, so therefore resources are need to undertake a strategy, because resources are very important. So without resources you cannot execute any strategy. Whatever the good strategy, suppose if you don't have a people to execute, so you understand how good your strategy, there are no people to implement this strategy, right? The strategy therefore depend on the resources. Sometimes you have a good strategy. Say for an example, now one particular bank going to bankrupt, or but they have a nice network, branch network. But what do you need? So this is an ideal opportunity to go and take that banks also to my bank. Acquisition. For that, what do you need? You need money, resources, right? So the strategy depend on all these things. Okay, right. So therefore, the resource audit. Next analysis is called again the Michael Porter value chain, right? Michael Porter value chain. It's another important strategy, the Michael Porter's value chain. right? Okay, so we'll have a break, Puta. So I will explain to you that part. Okay, clear? Okay, Yasoda, we'll take a break. Sandu, right? We have just completed 1 hour. We'll have a break and we'll start the other points, right? The Michael Porter's value chain analysis. So all these are what? All these are what we are discussing. The how we are going to analyze our present position. We use different techniques to analyze our present position, right? So now is almost 3:30. We may join again another 25 minutes, right, to continue the balance. Okay, we'll have a break. We'll join around 3:55. Okay, right. Okay, right. Let's start the things what we have learned up to now. I've just briefly summarized what we have learned in tute number 2. Okay, just to summarize what we have learned, and we in fact discuss about the strategic analysis, and we need to identify our present or current state. Where are we now? Okay, so you are there, no? I mean, okay, so let's start. Right. So let's start the people who may join just to summarize what we have learned. What are the yes, last Sunday we discussed about where do we want to be, and today we start with where are we now. For that, we analyze the why we need to uncertainty because of the complexity and the dynamism of the factors, and we need to analyze our environmental to identify the threats and opportunities and the weaknesses. So the business environment we are facing basically divided into 3 environment. One is the internal environment, that is your organization. Then you look at the organization, the environment which is close to your bank is called micro environment, and the environment which is little away from you we call the macro environment. For that, we discuss about these corporate appraisal techniques, where we discuss about the SWOT analysis, and we explain what is SWOT analysis, why it is important, where the analytical tools we using for identify your strengths and weaknesses. There is called the resource audit, Porter's value chain, PLC, BCG, and we need to discuss about the gap and the benchmark, and these opportunities. In the external, we discuss Pestel and Porter's 5 forces. Then we discuss about the external environmental analysis, how the political factors impact your businesses, and how the economic factors. So these are sometimes we call these are uncontrollable variables, right? These special factors are we call them as uncontrollable variable because you cannot control. We have to adapt to these factors. Then we discuss about the social factors, how it impact your strategy planning. Then we discuss the technological factors. Then the legal factors, data protection law, and there are some laws. Parat execution also comes under that law. Then environmental law, environmental factor play an important role. We discuss the climate issues, and then we discuss the usefulness of pestle analysis, and that is analysis we heavily used by almost every bank to understand the how these external factors impact your businesses, because these controllable these variables are we call them as uncontrollable. And the pestle in fact is an input to the lot of analysis. It will benefit it for bank to understand the environment they are living, how these changing factors impact your businesses, right? So that is why the pestle factor is important. Then we discuss pestle factors also important because we not only read the present external factors, how it impact, and also the future factors going to impact. For that, so we have some techniques we may use like Delphi techniques, expert opinion, regression analysis. Those are forecasters techniques. What may going to happen in Sri Lanka in another 1 year's time. So I think as bankers, when you go and meet, when you attend some functions, a lot of non-bankers are asking from you, what happened to the banking industry, whether our money is protected and blah blah, what is the country's situation and all and blah blah. So then you as a banker, you need to explain to them what is happened and blah blah, because otherwise then only your status quo is maintained. Otherwise that person who's asking, expecting you are a vigilant or you are a good person in the banking who knows about the banking, and then they may underestimated you. So that's why we need to understand all these things. Then we discuss about the industry analysis, how Michael Porter uses his 5 forces strategy. This important is these 5 forces determine profit potential, and just because of your industry is big or growing is not guarantee your profits, right? That's you need to understand. In the present, the banking industry is growing around 13 to 14%. So therefore, in your setting your objectives or targets, say for example, you set last year target, say for example, profit targets, or maybe say lending targets, may put say 100 million, for example, right? So what is your normal growth in the business is 13. So you need to put at least your target at least 113 billion, because to maintain the same status, otherwise you have to put more than that. If you put less than 13, what happens? You are losing your market share. So that is why we need to understand. So the Michael Porters we explained developed by Michael Porter, and this is the only living person at the moment in the world, and he has identified how these competitive forces impact your businesses, right? Entering of new entrants, threats of substitutes, bargaining power of suppliers as well as the customers, and inter-rivalry. So how these factors impact your present position. Right, and then we discuss another important thing. So while you are understanding your industry, and also you need to understand your competitor, where you will discuss some techniques used by you and what sort of companies who offer similar product to the same customers and who have similar size and structure of the organization. So example I can quote is Coca-Cola and Pepsi. Like in Sri Lanka banking, two banks, like for example, State Mortgage Bank and Housing Development Finance Bank. Both are almost similar, right? They are catering to the same bank. So these are brand competitors, if you put it like that, right? But industry competitors, companies who produce similar product and who are not similar size. Like for example, Bank of Ceylon versus NTB, right? Same offers, but to two different people. Then form competitors' main products satisfy the same needs, although they are technically quite different. Like speedboats versus sports car, an example, right? To satisfy the same need, although they are technically quite different. Now, say for example, you can say leasing companies and finance companies, but they are competing, but two different ways, right? So generic companies who compete for the same income of home improvement versus gold club. So generic competitors are all banks, right? Okay, so likewise you can divide your competitors. Now, how can you respond to the competitor? So sometimes you may ignore, sometimes you need to select certain competitors and attack, and sometimes you be fight and always compete. Now, say for example, commercial, if you take for example commercial and Bank of Ceylon, they are tighter competitors, right? Like NTB versus DFCC, NDB. So they are tight competitors, right? A statistic is competitor mean they don't have a predictable pattern to compete to responses, just they like RDB and all. You can understand. So competitors also can be divided in a different way, and there are some competitor types. You say direct competition. That is all. Say you are a commercial bank. Say Sampath, all commercial bank. So there may be indirect competitions, as I explained to you, can come from all other than the other than the banks. Then potential competition can come from maybe banks like non-banks, like fintech companies, and latent competition maybe also some corporate societies. We can consider them as like that. So you also can understand the competitors in that way. Then you need to understand the internal analysis is a crucial part of developing a strategy. You need to understand that. So we make use of two techniques. The two techniques were heavily used by the product portfolio techniques. So what are these two methods? We call Bcg and PLC, Product Lifecycle and Boston Consultancy Group. So the product lifecycle, as you aware, like human being, organization also going through the lifespan with their products, and accordingly we divided these things into 5 stages, like product development, introduction, growth, maturity, and decline. So through the product life cycle, what you need to understand, when banks also having a product portfolios. Now, what do you mean by a product portfolio? The number of products available for bank to market. That is what you call product portfolio. So this product portfolio, you need to understand where your bank's product portfolio is fixing. So you may have some products here, you have some products here, some products here, like that. So why we need to understand? Because they show different characteristics based on the stage of the product life cycle. Now we need to come with some strategies based on the product life. Suppose your products are here, most of your products are here. So you, of course, yes, you are earning high sales, high profits, but there is a chances to be comes down, right? So what strategy, what you are going to do to extend this maturity period? For that, you need to add values to your product. You need to reintroduce to the market, or what you call the regenerate. Now, say for example, a classic example I quoted in Lux. Then Lux now a Suwandaki. Now Lux now a Penumuki. So why they talk on that? Because they want to extend this period where you get high profit. So from product life cycle, you understand what type of strategies you are going to use based on this difference. So suppose the product come to decline stage, what are you going to do? You are going to take out from the business or not. So now you know a lot of banks like example SR and Rexona. So I told you is a decline. That product is not available in the market. But something different in banking industry, you can't, according to the customer charter, once you introduce the product, you cannot close. But you can, suppose the customers are there, you need to maintain the products, but you cannot stop opening up a new account. Or otherwise, you can take out from the portfolio, but you need to pay adequate compensation for those customers. So therefore, banking business, you cannot do things like that even the products come down to the decline stage. But some organization, even though the products are not having good profits, but they still maintaining because of some sentimental value. Right now, you noted that some people are, they don't want to sell their old car like that, right? So there's some sentimental value. Still, certain banks maintain certain products. So product life cycle also therefore give you a important inputs to a bank before they develop their product. And then we discuss about the Bcg Matrix, so what you call the Bonson Consultancy Group method. And here what we'll do, basically, your products are divided into 4 quadrants, right, based on the relative market share and the market growth. And then you identify your brands put into which quadrant and take appropriate strategy. That is why we need to say, suppose your products comes under question mark, so you may have to think, okay, how can you convert this problem marks, the problem child or the problem product to star or to cash cow, or maybe even remove it from your product life cycle, right? So that is why this Bcg matrix help us to understand which products give you high profits, which products not give you high profit, right? That is the purpose of this Bcg. Then we discuss about the resource audit, and we explain how you can make use of your resources to get the maximum output. Then you have a VRIN framework. So through the resources, you can obtain the competitive advantage. So how can your resources create value to your customer? How can you resources make it rare? Then how can you resources make us inimitability? And how can you competitions, how you may use it non-substitutable, right? It's very difficult because that is your competencies, right? Okay, that is competencies means skill, knowledge, and attitude. So attributes, right? So next component, the next techniques is again developed by Michael Porter, and that is the one we have stopped. I'm just going to explain about this point, right? I'm going to explain about these value chain analysis. We call Michael Porter value chain analysis. We discussed Michael Porter 5 forces strategy, and this concept also developed by Michael Porter. Now, according to the Michael Porter value chain analysis, now you may thinking, what is the purpose? Now, it's have a good purpose of studying this technique. Now, Michael Porter has identified there are 1, 2, 3, 4, 5. There are any organization, any business organization, they have a 5 primary activities. 5 primary activities and 1, 2, 3, 4. That means 4 important supportive activities, right? Now let's look at it, how these activities facilitate for you to understand your business present position, right? Now, say for example, take the inbound logistics. So that means inbound logistics mean here. So that means you bring the basically, if you take the raw materials here, you take the raw materials, and then raw materials you converted in through your operations into outbound logistics. Output logistics mean your product and services. You take the input, convert inputs to output your final product and services, and then you make use of these product and services to market and sales, right? And provide after sales service or whatever, and keep the margin and sell it to the customer. And this is the primary activities, that mean whether it's a bank or any institution is carried out. These are, we call them as primary activities. So that is what Michael Porter identified. Any business have these 5 main businesses: bring the inputs, converted, output and services, product and services, use your marketing and sales, and also some after service. With the margin, you sell it to the customer, right? So that is why it's called primary activities. In order to carry out these primary activities, so any organization needs some supportive activity. In order to carry out these primary activities, all organizations need some supportive activities, right? So those activities are we call procurement. Now, in order to get the inbound logistic, that means in order to get the inputs to the organization, so you must have a better procurement process. Now, say for example, if take the bank for example, inputs. What are the input banks? Is the employees, right? Train and provide services. Now, inbound for logistics here for bank, what is procurement mean? Recruiting, selection, inducing. So these are the procurement process and hiring. So you need to recruit the people. Recruiting mean collecting full of candidates. Then selection mean you have interviews and have a test, select the person, and then hired the person we take in, and then some induction program, that is some training. So that is a procurement. So inbound logistics, in terms of raw material, you must have a procurement process to get the correct raw material. Now issue is here what? Now say for example, for our case in converting, so this is a electricity board, right? And this is raw material is what you think? Say for example, this is the electricity board, right? And this is our outward, that is power. Now, if you don't have a procurement properly, they won't get the raw material at correct time. Then they cannot carry out the operation, this entire activity get affected, right? So example, now you can understand how procurement play an important role to carry out this primary activity. Then you look at the technological development. So you need to have a technological development. So you need bring you to have a new machines and things in order to carry out your operations, right? Facilitate. Then human resource management. So you need people, you must give recruit training, right? Output marketing, all you need human resource management. And the firm infrastructure, that means how your organization develop your uh, develop your what you call planning and all things. That is what you call um, factor here. We call firm infrastructure is called the management. That is planning, finance, quality control, right? So these are important for organization strategic capability in all primary activities, right? It is important. Clear? Now you noted that. Then you will look at it in Michael Porter's chain analysis. What they talk about, the margin is basically as I explained to you, and this is the margin is the amount the customers is willing to pay for your services. How you add value through this process. Now, example I will tell you. Now, take on the spot of selling right? So how you add value to a customer who made an accident, how you get their insurance claim, and that is value addition. For that, customers are willing to pay little higher premium for them, right? That is what you call margin. Margin, basically how margin is the excess the customer is prepared to pay over the cost of the firm for obtaining resource input, and what it's creating value creation. Right, now you noted that in this frame, now why we do, now you take all the process in the bank, they go through these activities, and through this value chain analysis, what we are trying to do, we may look at it, what is the area we have a problem in order to carry out this primary activity, whether it's a procurement, whether it's a technology, whether it's HRD, and whether the firm. And then you take some action. Suppose your marketing sales team fail, not enough, right? So that's we have to take the people. For that, you need to get the support from human resource management. So this the Michael Porter's value chain analysis by analyzing primary activities and supportive activities. So you try to identify where you have wrong, right? In this area or this area, like that. Then you take some precaution action. So that is why. So however the strategy is good, right? If you not positioned to add values in this value chain process, so it won't success. So then you need to understand where it's going wrong. That is what you call the value chain analysis, right? This is important again. Right. Then that's the points. Now, how many things we learn now up to now? We learn about first we learn the Pestel analysis, and then we learn Michael Porter's 5 forces analysis. Externally we analyze, and then internally we analyze the basically the resource audit, and then we discuss about the gap competitor analysis, right? And now we discuss about the value chain analysis, find out the internal aspect, right? Okay, then you also going to analyze the gap, some techniques we use the gap analysis. At BCG and PLC we learned the gap analysis. So what is a gap analysis? Now, in your business or companies, gap analysis compares the actual performance with the potential performances. So you look at it, our actual performances and the performance. Okay, if you take the last year, so this is our actual performance with potential performance. Should have done this. Market is there. So you see, example. I will tell you example. I explained to you banking industry or the financial sector, market growth is around 13 to 15%. For example, 15% value. So you achieve only 12%. So there's a potential. But then there is a gap. So then you need to right? You need to identify, right? Why this gap created, right? And then what is the problem we face in the current state? So that's what you're going to analyze. We call gap analysis, right? You get an idea about where we have gone wrong. So therefore, the benefits of gap analysis. So it will tell you what are the areas you need to concentrate on. I mean, identify the required gap. Okay, right. Then for that, as I explained to you, the forecasting. So we can use time regression analysis, time series analysis, right? Delphi, think tank, brainstorming, right? So there are some techniques you can use to forecast and as an identify the gap analysis. Then there's another analysis we call benchmarking. Now, it's a benchmarking is a process of comparing the performance of a company with another organization performances, right? So benchmarking. Now we now in banks we look at it similar bank and with another bank. Now say example cost, some ratios we can compare. For example, cost per customer, cost per deposit, cost to income ratio, like that we are comparing with similar banks. That's a one approach, right? You are comparing certain ratios with another similar bank. So that is benchmarking. But in today's the modern way, you may not look at it the bank per se. Now say for example, I'm just tell you, now you are in the banking industry. You are in the banking industry, worth asset of, say asset value is 100 million. Your banking is 100 million asset. Then you look at it, you try to benchmark with, it is not necessarily to be a bank. You may look at consumer market, consumer company, consumer manufacturing company, product manufacturing company. Their asset turnover is okay. Asset is also 100 million, right? Return assets are same. Say bank asset is 100 million, consumer manufacturing company assets also 100 million. Then you look at the asset return on assets. Bank is 5, say for example. Other one, the consumer is 10. So, but you are using the same asset, but they are earning more return than the bank. Right? So one thing you can benchmark with your similar bank, but you can compare it with not necessarily for bank. Maybe have. So the investor, they may look at it, whether to invest in the bank or whether to invest in the other bank. Of course, there are some factors you need to look at it. But for straightforward, you can compare, okay, if I invested in the banks, I will get only 5. Whereas if I invest the same money in a consumer manufacturing company, but I'll get 10. So therefore, where the invest is going? So benchmarking also you can make use of to understand in that sense what is your present position, right? Okay. Then another important thing is what you call the stakeholder analysis. What you call the stakeholder analysis. Another important analysis. Now, who is stakeholder? I think you know the stakeholder mean a group of people or individual who is interested about your organization is called a stakeholder. ආයතනයේ පිළිබඳව උනන්දුවක් දක්වන පාර්ශ්වයක් වෙනවා. එයාට අපි කියනවා stakeholder. Right? Now, important thing is there are different type of stakeholders because now I think you may recall it when you preparing your missions and objectives. So you need to look at it your stakeholders. When you look at it, your corporate governance, can you remember you may learn corporate governance also, the manner in which control and manage your organization with the fulfill of stakeholders. That is corporate objective. Likewise, you need to understand your stakeholders, right? Because stakeholders play an there may be there are three types of stakeholders. There are some internal stakeholders. Who are stakeholders? You are your staff, your employees, your management, your board of directors. Those are we call internal stakeholders, right? But there are some shareholders are connected, right? There may be a shareholder connected, but there are some external stakeholders like government, pressure groups, right? Customers, all are external stakeholders, right? There are, now if you put like this, the connected stakeholders are is an intersection. Sometimes there may be internal, some are may be external, right? Especially the shareholder. Some are working, some are not working, right? So the stakeholders. Now you may identify different type of stakeholders, right? Customers, suppliers, creditors, community, government, general public, environment. So these are all we call stakeholders. Now these stakeholders only we divided into three: internal, connected, and external. Right now, say for example here, maybe government, then you call customers are external stakeholders. The internal stakeholders are management, employees, right? Like, okay, right. Community are external. Then there are some shareholders are both internal and external. So that is why they put connected, right? They may link. So now you have an idea about what is stakeholders, right? Now before we are going to discuss, I am going to explain to you about this. Just give me a minute, right? Just give me a minute. Yes, doctor. Yeah. So there's a small things to be attended. Okay. Right. Coming back to this one about the stakeholder. Now, I think you may understand who are the stakeholders, right? There's other people who are interested about your organization, right? And the most important thing is why we need to understand them, right? Because you noted that they have a different need and expectation, right? For example, now employees have expectations about good salary, good working conditions, job security. Then the managers and directors also have a good payments and things like that. Then you noted that another stakeholder like shareholders who is interesting about the dividends and the capital growth. Customers, of course, what they expecting from bank, value for money, product and services, and what supplier expecting from a bank to pay their money promptly. Financial providers pay repayment of finance. Then if you look at it, uh, when you look at it, the community at the large, they want to be negatively impacted the business decision, and environmental pressure groups and banks need to also to look at the external environment. Government, of course, expecting taxes. Uh, Trade unions also expecting good decisions making without harming to their people, right? So therefore, different stakeholders have a different need and expectations, and also they may have certain conflicts, right, about employees versus managers, customer versus shareholders, because customers are expecting good quality but the shareholders are expecting high dividends. Then there's a clash, right? Then the general public and shareholders likewise, there may be a conflict. So therefore, stakeholders in that sense play an important role, even though we have not understood or not discussed properly. So it's very, they are playing a very important um, role in the organization. So when you start preparation of strategic plan, we need to understand or we need to fulfill our all stakeholders requirement, right? For that, so that is why we need to understand their power, their interest. So particular interest and their power. They certain stakeholders have a higher power. Now, say for example, take for example customers, one of our stakeholders. They may have a power as well as interest. They concern about our brand survival. So then how we are dealing with such customers, right? So that is important, right? For that, we have identified a matrix like BCG, right? We have identified a separate matrix called Mendelow's power matrix, right? That is the power interest matrix, and this was developed by the guy called Mendelo. So Mendelo, he is the person who developed, like now we discuss BCG. You know, can you remember BCG matrix developed by Boston Consultancy Group? That is a university professors in Boston University developed that concept. Likewise, this concept is developed by what you call a Mendelow's, right? That is why I call Mendelow's power interest matrix. Now, you may recall in BCG matrix, right? You may recall the BCG matrix. What are the axes we use? One axis is market share, other one is market growth, right? And then accordingly, we put into the your products are put into those blocks. Now, for that, we have a lot of software packages available. You take the total market share about that particular product. Now, say example we'll take for example, we'll take the savings account balance, right? Now, how you putting that? So you look at it, the total savings available in the financial sector, commercial banking sector, and you can say around, it is around 10 trillion. Now, what is your bank position? Say 5 trillion, example. So what is your market share? Is 50% in that case, right? So according to the market growth, what is your growth? How it growing, right? So last year, your savings growth is market industry growth is so much, your bank growth is so much, and then you take the market growth rate as well as the market share, right? So a lot of software packages are available, and you just work it out, putting that figure into that block, into the matrix, right? Now that is how BCG matrix. Now here what Mendeley is taking, he identified the two extreme cases, two extreme axis. One is the interest about your stakeholders now, and the power of stakeholders. Accordingly, he has developed this matrix. Who developed? Mendeley. What he said, okay, level of interest about your organization of that particular stakeholder is low here and is very interested. And suppose the power of that particular stakeholder about your organization is very low or maybe very high. Based on these two parametrics, right, we use power interest matrix, right? Now, accordingly, like your product portfolio I have put into this slot, your stakeholders can put into these four blocks based on your interest. Clear? Have you understood? Clear, Buddha? Right? Right. So, what happened here, based on your interest about your stakeholders, you can be put into this one of these quadrant. Right. Accordingly, you say minimal effects. Now, there are low level of interest. That means here, the minimal effects mean, so you identify you as one of your stakeholders, they are not much interest about what you are doing, and they don't have much power. So you don't want to concentrate these type of stakeholders, right? But some stakeholders, they have a high interest about your organization, but they don't have a power. So they are very interested, but it is your job is to keep informed. So you need to keep informed, and they are little worried stakeholders. And also here, there are some stakeholders, their interest is low, but their power is high. What you try to do? So according to Mendeley, they said you need to satisfy them. But these are the guys who having the high interest about your organization, high power about your organization decision. So those are we call key players. Now, having identified the number of stakeholders, you can put those stakeholders based on your organization into these four quadrants, right? And that is what you call power interest matrix. Okay, now let me give you explain to you some story example on this, right? Base use of this. Now take, then if you can answer to this question, you will understand what is, how important this power interest matrix. Okay, take this example, will you? ABC is a forestry business, that's a company, which leases several large woodlands from the central government of country Z. Right now, ABC is a company, they are dealing with forestry business, right? Leases several large woodlands from the central government of country Z. So the central government country, well, so now ABC company at the forestry business it currently employs 2,000 members of staff across the country. Then ABC how many employees are they having? Right. Now, according to the first statement, can you identify the stakeholder, two type of stakeholders? Can you identify two type of stakeholders? One is who? 2,000 number of employees, right? And ABC management. And who? The central government. central government of country is it, right? 3 identified groups. Then you look at the second. ABC supplies over 300 small businesses with wood across country Z. Now they are supplying to how many businesses? 300 small businesses. They supply the wood to another group. They are the buyers. Is it? Country is it well in small sectors 300කට මේගොල්ලෝ මේ forestry දෙනවා. However, recently its profitability has been poor and has been struggled to pay any dividends. Right. Right? What happened? Then me ABC company මේ ලාභය අඩු වෙලා යනවා. ඒ නිසා අර dividends එයාගේ shareholders ලට dividends ගෙවන්න පොඩි ප්‍රශ්නයක් මතුවෙලා තියෙනවා. Now you identify the different type of stakeholders in this company. Right. Then you look at it, the stakeholders. Right. This has angered the company 3 stakeholders. ඔන්න stakeholders ප්‍රධාන වර්ග 3ක් මේ කටයුත්ත නිසා agree වෙලා. Who each own around 20% of AB share capital. One stake shareholder is having 20%. The remainder is owned by the public with no one investor owning more than 1% of the total share capital. එතකොට කවුද ABC company වැඩිම shareholder interest කරන්නේ? මේ 20% of තියෙන ABC share capital එක තියෙන shareholder තමයි interest, but others not interest. Why? Only having 1%. So majority of 80% of shareholders not having money. Right now you identify. The 3 main shareholders have asked the board of directors, right? 3 stakeholders, 20%, right? The 3 main shareholders have asked the board of directors to consider making 200 employees redundant. Now, අර 2000 අපි කලින් කොල් 2000ක් වැඩ කරනවා කියලා. Now these 3 main shareholders who are having the 20% of shares in the company was requesting the management or board of directors to redundant 200 employees. However, the employees are not heavily unionized. බැංකුව වගේ නෙමෙයි අර union එච්චර strong නැහැ. Right. Now you know the organization. Right. Now, state and explain the appropriate strategy from Mendel's matrix for each of the following stakeholders. Right. Now we have identified ABC customers. Right. ABC customers. Right. Then major shareholders, employees, government of countries. Right. Now you look at it, this quadrant. So from who A, who B, who C, who D. Right? It's very interesting story. Who A out of this? Right? Don't put here. ABC customers. What type of shareholder? Whether they are minimal effort shareholder, key informed type of shareholder, key player, or key satisfied. Right? Now you need to understand that is the purpose. Okay. So who is ABC customers? Right? Okay. You take minimal effect. Now ABC customers are like to have a little interest in the staffing of their suppliers as long as does not affect the services of product they receive. So customers are not problem because they are not worried about the ABC company's employees as far as they have their income. So they don't, then they will individually have little power as they do not from the significant part of ABC's revenue. So minimal effect. Right? Okay. Then you look at the second. Key players. Who are the key players? Key players are the board will see the 3 major shareholders having high power due to their high proportions of voting rights. Right? So they are the key players. Then keep informed. Employees are not heavily unionized. So have little collective power. They will highly interested how as many of their jobs at risk. They are to inform. We have a situation like that. So we have to have a 200 people redundant. Suppose the employees are highly unionized, then they also can have a key player, right? Remember. So they keep satisfied. The government of country is it because the people who give the money, so therefore they have to keep informed. There is a situations like this, right? Now you identify based on your organization who are the type of customers who are have a different power and different interest. Accordingly you take some action, right? So that is what you call the Mendel's matrix, right? Okay, තේරුණාද මේ Mendelගේ කරපු හැටි? Yasoda, you understood how you use the Mendel's matrix? Marka, how තේරුණාද? Dinesha, you understood how? If you not, please tell me. I will tell you again. තේරුණාද ඒක කොහොමද how Mendel's matrix use to analyze your shareholders, stakeholders? Marka, you understood? නැද්ද? Marka, you are there? If you not understood, I can tell you again. Hari? Okay, understood. Dinesha, you are there? Dinesha, you are there or not there? Yasoda, Yasodya, you are there? Innodu. Imakat nedda? Hari. Right. So let me explain, Billy. Then we moving to having understood now. So okay. So now what we learn up to now, we learn a lot of analytical techniques to identify my business position. So first we discuss Pestel analysis, and then we discuss about the Michael Porter 5 process analysis, and we use the PLC and the BCG, right? And then we learn about competitor analysis, and then we learn about stakeholder analysis, and we learn about the resource audit. So you noted and gap analysis. And now you have understand how many techniques available with us to analyze our present position. So when you develop your strategy plan for your bank, usually what happens, there may be a lot of such techniques used by your stock people with maybe support with some specialist in that area, right? So you really understand your present position, right? So what is last week we discussed? What is my present position? What is my where I am going to be? So that's what we discussed in the first day. Now, second day, today we discuss about basically what is my present position. Last week we discussed where you want to be, and now today we discuss what is my present position. Right, now I know what is your present position, and now you know where you don't want to go. So then comes what? Then it comes, how do we get there? Now, last Sunday we discussed this, and this Sunday we discussed this. Now, find out from here how we are going to this position, right? From present position, second. Now, I told you that there are 3 questions, right? What are the 3 questions? Where are we now? Where do we want to be? And how to be there? That's the third question. So that's come the strategies. That's come the strategies. So the strategies through our internal and external analysis, right? We have our capabilities, we have our opportunities. Now we are going to do through use of strategies, we are going to make these differences, right? So this is what you call a strategy, right? In a business world, we have a four main broad type of strategies, right? We may have a broad type of strategies in the business world, right? So what are these four main type of business strategies? So if you really look at it, any organization use one of these four strategies. Okay, one of these four strategies. So what are those strategies? We call them as any bank, any company use one of these four broad strategies. You look at it, your bank, you may look at it, any organization, they may use one of these strategies. So that is what we are going to discuss in detail, right? Maybe most probably maybe next Sunday. So we are going to discuss all these important strategies. I just give you some introduction to that, right? What do you mean by intensive strategies? What do you mean by integrative strategies? What do you call by diversification strategies? What do you call by a defensive strategies? Right. So take for an example, if you want to improve your businesses, if you want to expand your businesses, so you may use intensive strategy, integration strategy, or diversification strategy. Suppose if you want to protect your business, you want to survive, you may use, or you may out from the business, you use defensive strategies. Right. Why you want to improve your business? Why you want to expand your business? Why you want to broad base your business? There may be a different reason for that. One is for improve your profits. So why we want to expand your business? What are the reasons? One, for you to improve your profits. You want to improve further profits. Therefore, you need to expand your business. Or to reduce the risk. Now, suppose you are in one business. If something happened to that business, what happened? You lost your entire money. In order to prevent that, you want to diversify your businesses. You want to diversify your businesses. For that, so you going for a new business area. For that, you use different strategy. Third one, sometimes you may feel it, it's for personal reason. Personal reason, if you want to improve your ඇගේ ව්‍යාපාරය දියුණු කරගන්න ඇගේ කැමැත්තක් තියෙනවා. දැන් ඒ වගේ වෙලාවකදී අපි භාවිතා කරනවා the expansion strategy, right? So likewise, or maybe in the you may face the threat. If you are not expand your business, you losing your profitability, your market share, you want to expand your further business. For that also, you may use certain strategies, right? So therefore, any business, if you really look at it, all these business people using one of these four strategies to improve your business or survive in the market. Right? Now, all these strategies and all these strategies we are going to discuss in detail in next Sunday. So for explaining of what is intensive strategy, what do you mean by integration strategy, what is diversification strategy, what are the type of defensive strategies available, under what circumstances these strategies is used, what are the advantages of these strategies, what are the disadvantages of strategies, right? And all these things we are going to discuss, right? I just give you a small area here. Take first one as an intensive strategy. We'll take first as an intensive strategy, just for a give you some food, right? Intensive strategy. Now, say your bank, take for your bank. Now, your bank want to improve your businesses or improve your sales to your existing customers. Now, say your bank want to improve your businesses by catering to your existing customers. Now, you have a, say, example. For example, your bank want to improve your businesses to your customers. So, what you can do? What sort of strategy you can apply? These are, we call them as intensive strategies. So because it's a growth strategy, we call them as an intensive growth strategy. Now, there are three types of intensive growth strategies. There are three types of intensive growth strategies. One is market penetration. Second intensive growth strategy is what you call market development. Third strategy is called market development. Now, these three strategies, we call them as intensive growth strategies. In fact, these strategies was developed by Ansoff. The person's called Ansoff. That is what you call intensive growth strategies. Now, look at it. Your bank going to use these three type of strategies: market penetration strategy, market development strategy, and the product development strategy. Right? How can you use these strategies? How can bank use these strategies? That's the important thing. Right? First strategy, we call them as market penetration strategy. So what you're trying to do here, your branch. Take for example for branch. Take example for branch. Suppose your branch, you want to improve your businesses. You're catering to your exist now. Your branch have some area, no? Right? Suppose your branch in say Nugegoda, example. Now your branch want to improve your businesses, but you may have some catchment area because there is another branch in Maharagam, right? So now you can't usually you won't go to that area, so you have a Nugegoda area. Now you have customers in that area. You have customers in that area. In your Nugegoda, there are a set of customers. Now, what you are going to do? So you are going to apply market penetration strategy. How can you do? In that Nugegoda area, you can do three things. One, you request your existing customers, take your existing customers to buy your products, or maybe your existing customers to deposit your money, or take more loans. Those are in the Nugegoda area. You already your customers. They are already your customers. You are asking to deposit more money or take more loans. Right? That's a one under market penetration. Then you may note in that Nugegoda area, there are some customers who are there with they have bank with another banks. Say your bank is A. There are some Nugegoda customers, they have banks B, C, D like that. What you're trying to do? You're trying to get those customers to your account, your bank. Attracting competitors' customers. But where they are living? They are living in your catchment area, your Nugegoda bank area. That's the second one. Third one. But there are some customers in the Nugegoda area, they may not have any bank account at all. They are not doing any transactions with any bank. These are the three type of customers can have in your bank area. No? Now I am referring to the person who is in Nugegoda. Now your branch is Nugegoda. So now you are going to improve your deposits. Example, improve your deposits. Now you can make use of market penetration strategy. Now in the Nugegoda area, you go to your existing customer who are having an account with you. You go and ask to increase your what? Increase your deposit balances. One, for your existing customers. Second one, in that branch area, that Nugegoda area, there are some customers who are dealing with other banks. You can talk to them and try to bring to your bank. You bring your competitors' customers to you. Second. Third one, there are some customers in your Nugegoda area, they don't have any account with no any other bank. So try to get them into your bank. So that strategy we call market penetration strategy. One of the intensive growth strategy. There are three intensive growth strategies. What are the three intensive growth strategies? Are market penetration, market development, product development. But here what we discuss, only one strategy out of three. Right? Okay. Now in order to get the people, banks are using different tactics. Now tactics are there to achieve strategies. Tactics are there to achieve strategies. What are the tactics you can use it? You can use it 7 P's. What are the 7 P's? Price, promotion, product, people, place, physical evidence, and process. So how you use these marketing mix 7 elements to attract, to fulfill your market penetration strategy? Now, one aspect is you are going to existing customer, right? Now you're asking customers to deposit more money. එහෙම කිව්වා කියන customers line දැනේ. Now what you are going to do? You can say, okay, now you have a balance of 100,000 in your savings account. If you make it for 150, I'll increase your interest rate. Oh, suppose your children's savings account. Your children is having, say, 1,000 rupees or 2,000 rupees. If you make it that deposit to 5,000, I'll give you a gift to your children. Right? So likewise, you offering some either pricing or some gift or some promotion, you are trying to improve your existing customers' deposits more. Right? Okay, clear? Then you're going to get the competitors' customers. How you get the competitors' customers? You can tell competitor customers what is your present, suppose your customer, your competitor's customer, within that premises, right, in your neighborhood area, you go and anyhow you meet in customer and say, where your deposits are put it, he may tells you, I put it in bank C for 1 year deposit. Then you will ask, how much you are getting? Okay, 10% per year, example. You can tell, I will give you a 12%. You bring that money to my bank. Now 2% is huge amount. No? So what happened then? Customer come, take that money and put it to your bank. You're bringing who's your competitor customer. That is how we do housing loan. We do housing loan. Redemption. Right? Okay. So you bring your customer. Then you may go, nowadays you can't go, we had enough experience. In Nugegoda, you take house to house campaign or door to door campaign. අපි යනවනේ ඉස්සර branch එකේ නේද? ඇදගෙන ගිහලා ගෙවල් වලට ගිහලා account open කරනවා. My goodness. The people who have not have the account, they will buy, may take your account. Open. Strategy. Right? I just give you some food for thought. How banks are using these methods? Yes, we are knowingly or unknowingly, we are using the market penetration strategy. Now, market penetration strategy is one of the intensive growth strategy. Right? So there are 3 strategies comes under intensive growth strategy. Market development, market penetration, and product development. Right now, these are the strategies we are using to achieve our goals. So likewise, there are some 3 main strategies. We are going to use it in details next week. Right? So before I wind it up for today, so let me summarize very briefly what we have learned. Okay, very first day at the beginning, we discussed where we have left on last Sunday, the objectives. Then we discussed the characteristics of objective. And then we discussed the functions of objective. Why objectives are important for organization. What are their functions of prime, planning, responsibility, integration, motivation, and evaluation functions. Then specifics, measurable, achievable, relevant, and time bound. That's just characteristics and objective. And then we discuss what Michael Porter discovered. Sorry, not Michael. Peter Drucker discovers. If any organization want to set objective, what are the 8 key areas he need to put it? In terms of market standing, productivity, corporate social responsibility, development, like that. So these are the areas, right? For that, we discuss where you're going to be from vision, mission, values, goals, objectives, and then all these things need to be done within the policy framework. It's give you guidelines how to set your vision, missions, and like that. That is what we have discussed. And today we continue from that. What is my present position? For that, we do a strategic analysis. We use different techniques. We need corporate appraisal, strengths and weaknesses, and opportunities and threats. For weaknesses and strengths, we did a different techniques, and we for opportunities and threats we identify another techniques. To identify opportunities and threats, we introduce what? We introduce pestle analysis and Michael Porter's 5 forces analysis. For internal strength and weaknesses, we use different techniques, right? We use the resource audit technique. We use PLC techniques, product life cycle techniques. We use BCG techniques, or Boston consultancy technique. And then we discuss further and we look at it another strategy, another technical analytical tool. Then we use we call them as the competitor analysis. We also use. And then we use the another technical analytical tool to identify the internal strengths as well as the external strengths is benchmarking. We compare with the organization with other organization, or maybe similar or not similar. Then we use another technique we call gap paralysis. And then again we discuss the analytics of your stakeholders. We discuss who are the stakeholders, why they are important, what sort of expectation these stakeholders are having, what sort of conflicts they play. Because of that, when you're executing the strategy, we have to play an important role of analyzing your stakeholders. So for that, we use Mandela's power interest matrix. Identify stakeholders with a sort of example. Certain stakeholders are important, how you need to look after them. Certain stakeholders are less important, how you are going to apply them, like that. Right? So now you have a clear idea about how we are going to analyze your present situation. I'm repeating again, we are using corporate appraisal techniques. One, pestle analysis. Second, Michael Porter's 5 forces analysis, competitor analysis. Then we use resources audit analysis, BCG analysis, PLC analysis, benchmarking analysis, Michael Porter's value chain analysis, and then gap analysis. And top of that, we discuss about the stakeholder analysis. To see how many techniques we use to analyze the. Then, having understood that, now you know where are we, now where you want to be, then how to be there. For that, I'll explain to you. That is why we have a strategies. Okay, so we give some food for type of broad in the strategies. Why we need to improve my businesses. For that, what is sort of a strategy we are going to use it. Right. So we are going to stop now with this type of strategies, and we are going to discuss all these strategies with some example, not only banking as well as consumer market example, how certain Unilever use these strategies, how banks are using these strategies, and we are going to sum up next Sunday with all these things. Okay, so thank you very much, and we'll see you all next Sunday, same time, and to finish the strategic management. Thank you.